Alrighty, good morning and happy Monday, everyone. Welcome back. Hope you all had a fantastic weekend. Let's get a quick sound check going in the free room and over on YouTube. A rainy day in Massachusetts. I think we got a rainy week ahead. But all right, folks, looks like we are good on audio. And I'm going to keep this a little bit short and sweet. Today is my wife's birthday, so we're going to hit the road here in a little bit. But for old Mama Market here, a lot of things made a lot of progress back on Friday. All right, so the recent market, it's been, the recent market, if it's not Google, Amazon, Nvidia, or Netflix, has not been working too well up until Friday. Really big improvement in the breadth from Thursday and Friday. So a few things here, folks. The S&Ps themselves, I want to say we spent the last 2 to 3 plus weeks discussing the idea of that daily squeeze here eventually firing to the upside. And that old pesky 4,200 level did give the market a pretty tough time. All right, daily squeeze sets up. We inch our way towards that 4,200 and right back down. They again go for round 2. Squeeze sets up. You got your buy signal. They're thinking about the breakout. All right back down. They try again, right back down, and then boom. Really good continuation from Thursday into Friday. So from a squeeze point of view, which of course is my favorite point of view, the bull squeeze here on the daily chart has officially fired to the upside. All that energy getting built up, really, guys, since the end of April. All that energy getting built up, finally getting released. And now where I think we're going to get the continuation higher is from that bull squeeze here on the 2-day chart. So we've talked a lot about that nested squeeze as of late. Think of names like Netflix, think of the semiconductors, the LRCXs. A lot of your bigger moves as of late, even in your leadership, has come from that nested squeeze setup. So Netflix, for example, daily squeeze fires long. In the process of firing the daily squeeze, the 2-day squeeze fires long. They go on to trigger the 3-day. They eventually trigger the weekly. And from there, you tend to get a pretty good move. You tend to get some nice continuation. So for the S&Ps here, I'm looking for that same domino effect. Daily squeeze finally fires. We find ourselves still coiled up here on that 2-day chart. And then you got the big fella, a big whopper of a weekly squeeze. So there's the short term and the bigger picture. All right, short term is the next 24 to 48 to 72 hours. In the short term, I think at a minimum here, guys, we might come on up here this week and test either the 4,300 level. We're kind of a stone's throw away. Or we might just go test the August highs back around that 43.25. So test the previous highs. Maybe from there you pull back a little bit. But bigger picture, and I've got the, give me 1 minute here, guys. All right, I'll show you that after. But bigger picture, at the moment, they have the structure, they got the signals, and they have the squeezes. I think to actually take the market well above the August highs. Not in a straight shot, of course. There will be pullbacks. There will be the consolidation. But I think you get that domino effect. First goes the daily squeeze, then goes the 2-day, then goes the weekly. Just take the rule of thumb of the squeeze. Once that squeeze fires long, you're going to tend to look for a good 6 to 8 to maybe 10 bars of momentum. So by default, that's where the nested squeeze is so powerful. Daily squeeze fires, you might get a good 6 to 8 to 10 days. A weekly squeeze fires, you might get yourself a good 6 to 8 to 10 weeks of continuation in the direction of that squeeze. So that all checks out. Now the real kicker here is all your recent losers. I think a huge part of what's actually going to break the S&Ps out here would be a bit more participation from names like the financials, energy, industrials, healthcare, all of the forgotten sectors. So we look at the RSP here, which of course is your equal weighted index. So you're taking all 500 names in the S&Ps and you're giving them all a equal weighting. This makes a lot of progress on Friday. That's a pretty big improvement. While the QQQ continues to pump, the semiconductors continue to pump. The equal weighted index here was definitely painting a much different picture. Under the 21, big daily bear squeeze, and a bunch of sell signals. So leading into Friday, that looks like a daily squeeze that wants to fire short. More importantly, it's just pretty good evidence you're not in a strong market. Apple's strong, Google's strong, Amazon, Nvidia, Netflix, they're strong. But with an equal weighted index looking like this, pretty obvious you're not in a strong market. So Friday, they do play a lot of cleanup here, guys. So as far as structure goes, you're back above your 21, and you're back above that daily 200. As far as the signals go, they canceled out any sell signal, including the sell signal from the daily chart. Now we've got a couple buy signals setting up. And potentially this week, down here on the momentum histogram, we might finally get that positive cross. So it's a probabilities game. You find your daily squeeze. And during that daily squeeze, if you're under the 21, cranking out some sell signals, the histogram is below the zero line. That all kind of points towards that daily squeeze wants to fire to the downside. Now I'm thinking we might have a little bit more of that slingshot effect. Squeeze prints, they drag it lower, they flirt with the idea of firing the squeeze short, and then boom, you get a really nice snap right back into the range. From there, you can get continuation to the upside. So a lot of improvements last week in the equal weighted index. So I think a big part of seeing the S&Ps continue to break out would be if the daily squeeze here in the equal weighted could actually fire to the upside. Signs of a stronger market. Jump over here to the junk bonds. And this has kind of been one problem in the background as of late. Where if we're looking for a strong market, right, not just a strong Amazon, not just a strong Nvidia, but if we're looking for a strong market, ideally you're looking for some strength here out of HYG. And very much like the RSP, the equal weighted, this has been a little bit suspect. Daily squeeze prints. Histogram is under the zero line, cranking out a bunch of sell signals. They flirt with the idea of firing the squeeze short. And then on Friday, they do play a little bit of cleanup. They cancel out all the sell signals. Back above the 21, back above the 200. It's a pretty good improvement. So I also think, along with the RSP, a big part here of getting continuation higher from the S&Ps would be if your daily squeeze here in the HYG could slingshot and eventually go on to fire to the upside. That'd be a big bonus. And then the dollar here, this one continues to be pretty interesting. Where traditionally, if you're looking for a strength in the market, the preference is you're getting weakness from the dollar. We're not getting too much here in the form of weakness just yet. So what I've been waiting for, all right, you get the big pump. Everything rebuilds. You get some buy signals. What I've been waiting for is that first pullback to a daily 21 EMA. Waiting to see whether or not we actually hold. And then from there, continue to trade higher, or if instead, you get your big pump, you get your buy signals, your first back test, everything falls apart. Kind of like you did back here. What I would think is best case scenario for the market would be on this pullback, the dollar falls apart. For now, it does remain a little bit more bullish. Really good hold of that 21 and a bunch of buy signals. So the dollar is still being pretty frisky. But I do think overall, guys, you go through a few of the sectors here. And mind you, none of these are even close to being perfect. Um, Rome wasn't built in a day, that kind of thing. But all you're looking for is progress. So energy, yeah, that still leaves a little bit to be desired. Healthcare here. Not perfect. Frankly, not even close to being perfect, but a little bit of progress there into the end of the week. So if energy continues to clean up, if the healthcare names continue to clean up, if the financial sector XLF continues to clean up, and that actually looks a little bit better, I think it all helps the S&Ps continue to break out. In the last couple charts here, guys, before we jump into the watch list, quick peek at the IWM. Huge move on Friday. I can't remember the last time we saw the small caps go up 3.5%. But a lot of progress is made here as well. So now you got a daily squeeze, momentum above zero, above your 21 EMA, with a whole bunch of buy signals. That all usually bodes well for that daily squeeze to fire to the upside. So really, the whole theme right now is daily squeezes. IWM daily squeeze looks much better. The daily squeeze in the equal weighted index looks much better. And your daily squeeze in the junk bonds, HYG, also making some improvements. And then last but not least here, the big Dow. The big bad Dow also makes a lot of progress on Friday. Daily squeeze prints, sell signal prints. They take it right down to the line in the sand, that daily 200 SMA. So again, you're kind of seeing that slingshot dynamic. RSP, IWM, the Dow, and the junk bonds, they all print daily squeezes. They all had sell signals. They all kind of flirted with the idea of firing short. And then Thursday and then into Friday, boom. Everything snaps right back to the upside. So now this leaves the Dow, this leaves the IWM, the RSP, the junk bonds, with some pretty good improvements inside these daily squeezes. So fast forward a little bit, 2, 3, 4, 5, 6 weeks down the road. If the Dow, and it's a big if, but if the Dow sees that daily squeeze fire to the upside, if the same thing happens in the IWM, if the same thing happens in the RSP and HYG, I think there's a very strong chance if all of that happens, you should see the S&Ps above the August highs. So kind of tie everything together. The S&Ps on their own, they got that good stuff. Structure, signals, and squeezes are all on their own, just this one chart. They got what they need here to actually take the market higher. Now, if you get participation across the board, right? If it's no longer just Amazon and Nvidia trying to take the market higher, much, much easier to actually get that breakout and get that continuation. So to me, what this all means, guys, is that potentially as I'm doing my scans, looking for my setups, I might want to start paying more attention to squeezes outside of technology and the semiconductors, which frankly, those kinds of names have not been working as of late. Reason being, the S&Ps up until last week were kind of having a tough time fighting their way out of that paper bag. Google keeps going, Microsoft keeps going, but anything not technology continues to have a tough time until I think now. So one example would be a name like, I'll throw a few of them at you. TJ Maxx. Doing the scans a couple of weekends ago. Here comes TJ Maxx, like everything's perfect. You got structure, you got squeezes, you got buy signals, and it kind of rolls over and fails. It's a good structure, it's a good setup, but it wasn't the flavor of the month. It didn't have a market behind it. Names like Visa, MasterCard, they come up on the scans. All right, everything's setting up. That kind of rolls over. Lowe's. Lowe's kind of tries a few times here. Got some buy signals, got some squeezes, just really can't get the job done. Now I think it's got a much better chance of getting the job done and seeing the squeezes on the weekly, the 3-day, the 2-day, the daily, and the 4-hour fire to the upside. Now a name like a Lowe's might actually have a little bit of wind at its back. But up to this point, they haven't been working. Another one is Costco. Here comes Costco. We got the squeezes, we got the buy signals. Here comes 5:30, and it all kind of fizzles out. All right, here comes round two. Got some squeezes, got some buy signals, and just can't quite get it going. S&P's breakout. Then a name like a Costco with some buy signals, with bull squeezes on the weekly, the 3-day, the 2-day, the 2-hour, with a market behind it. Now this has a much better chance of actually seeing that domino effect. 2-hour squeeze fires long. They go and trigger the 2-day, they trigger the 3-day, etc., etc. So I think these names might have a better chance here moving forward. And as far as a few that I like here, guys, one that was really catching my eye last week was this Boeing here. Boeing looking mighty interesting. So as far as path of least resistance, our indicator says we're bullish on the weekly, the daily, the 4-hour, all the way down to the 30-minute. So that all leans pretty bullish. And then what we got down here are squeezes on the weekly chart, the 3-day chart, the 2-day chart, and the daily. Now that blue label, that tells me we have a squeeze and a buy signal. Like, to me, it's the best combination possible. Where on the 2-day chart and the 3-day chart, we do have the squeeze, but the indicator hasn't flipped bullish quite yet. All right, things are a little bit more neutral. So what I'm looking for this week, of course, is for potentially Boeing to turn into a quadruple squeeze. A squeeze in the buy signal on the weekly chart. And if they can flip things here, we might get a squeeze in a buy signal on the 3-day and the daily. Then you got 4 of those bad boys. And I think your poster child is Netflix. Daily squeeze fires, 2-day squeeze fires, the 3-day, then the weekly. So we're liking this Boeing here. What makes it even more interesting is you got all these squeezes, all these buy signals, right under a pretty massive level of resistance. It's not only previous price resistance, it happens to be your weekly 200 SMA. So if anything can pack a big enough of a punch to actually break you through a level like that, I think it's that combination. 1, 2, 3, 4. All the squeezes fire long. You could open up the door for a pretty good move here. So the only thing that's missing, and we'll see where things open up today. But I would like a little bit of a better entry. I'm willing to buy it all the way down to that daily 21. But I would settle for a dip down to, say, the hourly 21. So we're keeping a close eye on that one. And then going back to Lowe's here, gotta like all that squeeze action. That's pretty solid. Bull squeeze on the weekly all the way down to the 4-hour. So I like Boeing. I like Lowe's. And then JP Morgan here. I think one of the cleaner picks for the financials. Bull squeezes on the weekly, the 2-day, and the daily. So I like JP Morgan. I like Lowe's. I like Boeing. Point being, guys, the last 2 or 3 or 4 plus weeks as I'm going through the radar, I'm doing my scanning work, I'm not paying attention to a JP Morgan. Haven't been paying attention to a Boeing. The only thing I'm looking for is Amazon, Google, Nvidia, Netflix. Now, mind you, I don't think the party in Google, Amazon, Nvidia, and Netflix is over. As a matter of fact, I think we trigger a serious move here for the market would be if we could finally get participation from other sectors. Financials clean up, healthcare cleans up, etc. And then at a minimum, if technology, semiconductors, the FANG stocks, if they can just even trade sideways, I think that does the market a world of good. Where if technology totally falls apart, then the idea of a huge breakout might be a little bit more difficult. You continue to get strength out of technology and the semiconductors, and then the other sectors actually join the party. Then this could all get pretty nutty. But at a minimum, keep technology afloat, get a little bit more participation across the board. And I think the door is wide open here for a pretty good move from these markets. And then for a few of the crowd favorites, the one that I'm really jonesing to buy on a flush here is Netflix. I want a little bit of that Netflix on the next pullback. And the reason being, the weekly squeeze just officially fired long last week. So take that rule of thumb. Squeeze fires long, you're looking for 6 to 8 to 10 bars of momentum. Well, it's pretty simple. If the squeeze here can work as advertised, there should be a lot more gas in the tank. Like in a lot of ways, the party hasn't even started. So what I would look for here, and you got a pretty big level, right? $400, big psychological level, and it just so happens to line up here with your weekly 200 SMA. So not to say this is how it's going to unfold, but selfishly, here's what I would love to see. Right, first push towards the 200. They can't quite break it out on the first attempt. Right, we get a little bit of a flush. Then I want to jump in with the thinking that A, the weekly squeeze does work as advertised, and you do continue to get momentum, and B, that we can actually break through that weekly 200 on the second attempt. That's a little bit of what I'm looking for. But that is just about it, my friends. In all reality, the day-to-day operations do not change. I run my squeeze scans, I watch my squeeze radar, and all I'm trying to do is just trade some good setups. What does change on a week-to-week, month-to-month kind of basis, I think, is the plate of opportunity where you're looking for those setups. Our entire focus of the last, 5, 6, 8 weeks has been to run the scans, right? Watch the radar, find that squeeze. But we're trying to do that in the semiconductors and technology. Ignoring names like Costco, JP Morgan, Lowe's, Boeing, because they had no market behind them. As the IWM improves, as the Dow improves, as the RSP improves, etc., I'm not going to change my day-to-day operations. Going to run the same scans, going to watch the same radar, going to look for the same setup. But given the context here, I might be a little bit more open-minded to say, hey, give me a squeeze in Netflix, I'm going to take it. But give me a squeeze on a Costco or JP Morgan. I might finally entertain the idea of getting long names like that as well. So a quick peek at the futures here. And then if you all got any questions, I will turn it over to you. All right, S&P futures are screaming. Up $2.75. We have not seen this kind of weakness in technology in a long time. Boy, oh boy. The NQ is down 10 points. Something is very wrong here. Sarcasm, of course. The small caps. What a move on Friday, man. Small caps pulling back a little bit, which I don't think is the worst thing. And then the YM. Now, Jones futures are flat. So everything's relatively quiet here, heading to this fine Monday morning. Well, all right, guys, we get caught up in the chat, see what y'all got, and then we'll get the day going. Sean, kind of surprised that Simper brought attention to the VCP. Yeah, Sean, I'm a big fan of the that volatility contraction pattern. What I've noticed is there's some decent similarities between that and the squeeze. And from reading Minervini's books, I know he's got way more detail, like as far as the actual pivot, as far as the trigger for an entry. But I always appreciated his work at the VCP because there are some similarities between that and the squeeze. Big fan of Mr. Minervini. Thomas in Texas. What do I think of IMGN? IMGN. The old gap and go. So let's see. As far as path of least resistance, everything's pretty bullish here. Buy signals on the weekly, the daily, the 1 hour, the 30, and the 5. So that's all pretty solid. And then you've got a daily squeeze and a 30-minute squeeze. So here's what I would do. The line in the sand here, to me, would be that daily 21 EMA. All right, big gap higher, little continuation, little bit of a chill pill. As long as I've got buy signals here, I can look for continuation above that 21 EMA. We pull back, we break that 21. I got to move on to the next trade. Now, as far as the trigger for the entry, what you might want to do is just drill down to that 30-minute chart and just trade that 30-minute squeeze. Actually, that's what I would do. This trade's around 14 bucks and change. A move all the way down to that daily 21, around 12 bucks and change. It's a pretty big flush against you. So what I might do is say, all right, I'm going to make this 30-minute chart my entire focus. And I'm going to trade that 30-minute squeeze the same way I would trade a weekly squeeze or a daily squeeze. I'm going to try to get long as close to that 21 EMA as possible, with the thinking, of course, that the squeeze here fires long and we get continuation to the upside. We break that 30-minute 21 and the buy signal disappears. Got to take that trade off. And that, guys, is where you're going to work really good risk versus reward. So like one example from our end last week was MSTR. And what I really urge all of you to do is, and I know I've said this plenty of times before, but where I think you're going to make some really significant progress in your trading is take a few hours every night, right? Wake up early, go to bed late, whatever you got to do. Study your go-to trade as much as you possibly can, right? For sake of conversation, say your go-to trade is a daily squeeze. Like that's your thing. You like to get long in a daily squeeze. You like to get short in a daily squeeze. You want to get as many hours under your belt as possible, studying previous examples of that go-to trade. All right, if your trade is a daily squeeze, you want to find and study as many previous daily squeezes as possible. And what I really suggest you do is if your go-to trade is a daily squeeze, go study that setup through the lens of all your lower time frames. All right, when I find a daily squeeze and that squeeze fires to the upside, what's actually going on here under the surface? Right? What is my 1 hour, my 30-minute, my 15, my 5-minute chart doing? And the more and more examples you can get under your belt, the more studying you can do, you develop a much better relationship with that pattern recognition. You become very, very familiar with what everything should look like. And to me, the goal of that is we're trying to find these moments in time where it's basically go time. All right, one thing I've noticed as of late is I continue to refine the process a little bit more. Almost all of our winning trades, they give us like zero headaches. Like they don't give us any issues because we're finding that moment in time where the squeezes, the structure, like everything's coming together. This thing is ready to take off. So our Netflix trades, our Apple trades, Tesla, LRCX, all of our recent winning trades almost took off immediately. Like we didn't sit through a drawdown. We didn't have to sit through 2, 3, 4 days of chop. It was just go time. Then on Thursday, we got long MSTR. We're above that 21. We had buy signals, we had squeezes, all kinds of good stuff. So at that point, my full expectation is this should do what Netflix and Tesla and Apple did. All right, the whole thinking is when you take a trade, I'm trying to put my cash to work during that high probability moment in time. I'm comfortable sitting through some chop. I'm comfortable sitting through a little bit of a flush. But as far as the setup itself, I can only keep that cash working as long as the setup remains that high probability moment in time. So Friday morning, MSTR breaks under the daily 21. Every buy signal disappeared. The 5-minute, the 15-minute, the 30-minute, they printed sell signals. It's no longer that high probability moment in time. All right, my indicators are no longer telling me this thing's locked and loaded. Like this thing's on the verge of a huge push higher. That's where I have to take that trade off. The most difficult thing about doing that is the realization of the loss. All right, we'll find anything we can. We'll cling on to anything we can to justify staying in that trade. So when I go back, I look at all my losing trades over my career. I'd be willing to bet, guys, 90, 95% of them were no longer a valid setup way before I took the trade off. The pattern that I used to get into back in the day, all right, we're going to buy some MSTR. All right, we're buying it because A, B, C, D. Next morning, A, B, C, D disappears. And then I start playing that hope and that pray game. All right, well, it's no longer that high probability moment in time. If I didn't have this trade, I wouldn't take it right now. But, well, I've got plenty of time till expiration. I'm going to give it some room. Or, but I've got short puts. I got a little bit of cushion. Point I'm trying to make, guys, is you go back to that 30-minute chart on, God, what was it? You go back to that 30-minute chart on IMGN. To me, in my own trading plan, this is where you can work that good risk versus reward. All right, at the moment, 30-minute squeeze has everything it needs for a nice push higher. So you find these kinds of setups. You try to nail your entry as close to that 21 as possible. And I think you really want to become ruthless about taking that trade off as soon as it misbehaves. If your thinking is the 30-minute squeeze here should fire to the upside, why the heck could we still be in that trade if this pulls back to 14 bucks? This pulls back to 13.90. If that squeeze is setting up here to fire long, it should happen, and it should happen right now. Shouldn't have to pull back, shouldn't have to come down and kiss that 200. Like it should all come together. Point being, you can work that game plan on a daily chart, or you can work it on a lower time frame. So that's what I would do with that one. All right, guys, a few more here. And yeah, Tony, yours will look a little bit different than mine for the time being, as I'm doing a little bit of work and testing on the big three squeeze. So no fresh updates as far as that goes just yet. Hey, what's up, Steve? Steve, first of all, welcome to the mastery. Appreciate you being a part of the team. And Steve, trades are opened whenever the setup is available. So no specific time of day and no specific day of the week. Monday morning, 5 minutes after the open, we got a good setup, we'll take it. 10 minutes before the close, Tuesday afternoon, we got a good setup, we'll take it. So whenever they come across our path, my friend, we pull that trigger. Okay, Steve, I get what you're saying. So Steve, we do live trading in there every Thursday and Friday. But as far as posted trades, I'll post them whenever they set up, during and outside of the live trading sessions. So Peter, great question. What is my criteria for a day trade in a 5-minute chart? Peter, for me, it doesn't change. Right. You got your bullish trades, you got your bearish trades. And I'm continuing to get more and more to the point where my bullish trade is just trading the squeeze, and my bearish trade, awful penmanship, but I'm just trading the squeeze. Doesn't have to be the squeeze, guys, but I do think you want one or two setups in your bullish playbook, and maybe one or two setups in your bearish playbook. So how am I going to trade a 5-minute chart? I'm going to trade it the same exact way I would trade a monthly chart, a weekly chart, or a 3-day chart. Right? My primary focus is going to be find the squeeze. So imagine we're looking at a 5-minute chart. All right, I got my squeeze. So I got my compression. The squeeze is telling me the 5-minute chart, taking a breather, it's catching its breath, getting ready for its next directional move. What the buy signal tells me is your structure, your momentum, everything's bullish. So when those two things come together, I'm looking for that squeeze to fire to the upside. So on a weekly chart, a 5-minute, a 15-minute, a 3.5-minute, I'm going to find my squeeze. I'm going to be disciplined. Try to take my entry, whether I'm buying calls, I'm selling puts, as close to that 21 EMA as possible. And from there, one of two things happens. Squeeze fires in my favor, or we break the 21, signals begin to shift against me, and I got to take that trade out. I got to take that trade off. That's the same thing we just did in the Netflix weekly squeeze. All right, here comes Netflix. In this case, the squeeze is on your weekly chart. So what am I trying to do? Same exact thing. Find my squeeze, find the buy signal, get long as close to that 21 EMA as possible, and one of two things happens. Squeeze fires in my favor, or we break that 21 and I'm taking that trade off. And as far as the MACD, the settings I'm using are 24, 52, and 9. So I use the same MACD settings for all the signals across any given time frame. All right, guys, we're running a little bit out of time here. Want to make sure I'm not stepping on anybody's toes. All right, let me bang out a few more here real quick. Okay, so Shopify, X, and some CRM. Shopify. So right now, Shop's got a weekly squeeze that's bullish. Or actually, I'm wrong. We don't have any bull squeezes. So everything's kind of neutral right now. We got a brand new squeeze here on that daily chart, but I don't have a trigger for a directional move just yet. The daily chart itself is neutral, but then more importantly, everything under that daily chart, everything inside of it, is also neutral. So a squeeze above the 21 with a bunch of buy signals from the ground up, you look for that daily squeeze to fire to the upside. A squeeze under the 21 with a bunch of sell signals from the ground up, you look for that squeeze to fire short. This is a kind of setup that for the time being, I can't make a directional call on. I got no triggers off my daily chart, and I've got no triggers here off my lower time frames. So when that begins to shift, then you're looking for the push higher or that break lower. And I would lean towards a push higher for now. All right, US Steel. So it's not the cleanest, but that daily squeeze always gives us something concrete to focus on. If we know anything, what we know right now is that your daily chart is preparing for that next directional move. Our job from there is to find the structure, find the signals, to try to dictate which way is that squeeze going to fire. When your daily chart is neutral, to me, the entire focus becomes about your lower time frames. If my 5-minute, 15-minute, 30-minute, hourly charts, if they can all go bullish, they're probably going to trigger a move upside. So above that 21, bunch of lower time frame buy signals. It bodes well for that squeeze to fire to the upside. Under the 21, sell signals, vice versa. So patience with this one, but everything kind of shaping up there on your lower time frames. And then last one here, guys, will be Salesforce. All right, Salesforce, what you got? Not too much here in the form of a squeeze just yet. But your weekly chart is bullish. Your daily chart is bullish. So I think another example, if you're looking for a trigger, you're above that 21, you got some buy signals. The stage is kind of set for a push higher. But in terms of studying these moves, what I would do is say, all right, go back here. And from a 5-minute chart up to an hourly chart, go study that move off that daily 21. All right, we pulled back towards it. We found some support. We turned the corner, and then the pump continued. What we all want to get really familiar with, all right, take your structure indicators, take your momentum indicators. From a 5-minute chart up to a 1-hour chart, what does it look like when we find support, consolidate, and then begin to turn the corner for a push higher? History doesn't always repeat itself, but it almost always rhymes. Meaning you've pulled back to the buy zone, and now to trigger your next pump to the upside, your 5-minute, your 15, your 30-minute, your hourly, they should all pretty much look exactly like they did back here, as far as your structure indicators and your momentum indicators. Alrighty, guys, but that is the opening bell. So I will let you all go here. As always, thank you for your time this morning. I will be back with y'all on Wednesday morning, and we'll do it all again. And then for my mastery folks, I will be live with y'all on Thursday and Friday. But all right, my friends, as always, thank you for your time. I wish you all the best of luck today and this week, and I'll talk to you soon. Adios.